Right now, listen to this shit. Spit this. One time for your mind. Work. Woo, woo. Woo. Represent. Okay. Right now, listen to this shit. Spit this. One time for your mind. Work. Woo, woo. Woo. Represent. Okay. Right now, listen to this shit. Spit this.
Just in time, because it's almost the end of this side of the record. Let's play some turning the record over music. Play.
Represent. She's in my dream. Right now, listen to this shit. Spit this. One time for your mind. It work. Woo, woo. Woo. Represent.
What's up, guys? How's it going? Happy Wednesday. It's 12 p.m. New York time. Lunchtime. We'll get started in a minute. Give me a quick sound check. Background noise should be down now. Microphone should be good. And we should be good to go. If you are not subscribed, go ahead and hit the subscribe button. Hit the like button. Bring your best self. And yeah, we'll get started in a minute or two. Sound is good. Sound is great. Great. Sound is goof. It's going well. Hopefully you guys are doing well. Markets are in turmoil. It's fun. Good times. Okay. Let's get started. Welcome. So I was going to stream on, Monday? And then I forgot about one of my tattoo appointments. Forgot about the date of that as well. So it ended up being that was a mistake. But by the time that I realized that, the time for the stream was since passed. And then Tuesday rolls around, which is the actual tattoo date. So I'm getting a sleeve done. You guys saw some of the work. It's in the picture on the top of my Twitter. Second appointment, so it's 2 of 6. And the guy, tattoo artist, so my guy Joe, never got back to me until like an hour before. I'm like texting him the night before, hey man, what time's tomorrow? Is it 1? Is it 1? Is it 1? And he finally gets back to me. He's like, oh, I think I have COVID. I'm like, okay, all right. So we'll reschedule till next week. Anyway, yes, please hit the subscribe button, hit the like button. Back to doing these streams. If you're not part of the Discord, the link is in my Twitter header. It is a free Discord. I lock it, I unlock it, I lock it, I unlock it. There are a bunch of fake horses that pop up, and I have to purge them. And I'm gonna have someone create a bot that kicks anyone who has the handle horse besides me. But they get creative. They write horse with a 0 instead of an O, and then they have different characters and things that pass under the radar. So if you're not subscribed. If you're not in the Discord, go ahead and join. There's no catch, none of that. You don't have to use a ref link to join. There's no payment or anything like that. But that being said, the Discord is not a place where I'm like hanging out all day. And like I go through these periods where I'm in there for a few hours and then I'm out of there for like 1 to 2 days. And it's what comes along with being a new dad. But it's basically just an archive of all the things that I think are valuable. I've tried to like pack it as much as possible. But I will be doing something different with it within the next month or two. But I'll keep you guys updated. All right. Remember, none of this is financial advice, right? Strictly for entertainment purposes only. Try to keep it as entertaining as possible. I tend to speak in circles, speak in ellipses, make fun of myself if I'm being redundant with my words. But yeah, let's keep it cool. So no nonsense in the chat. Try to keep it respectful. So if anyone's making comments in the chat, what I don't like to see is people sort of start trolling the people that are making comments. I don't know if you're bullish, if you're bearish. Obviously, I'm going to go over my thoughts, but yeah, just everyone's entitled to their own opinion. Everyone approaches the market differently, and I have respect for anyone who is still around. So I think that's everything with the formalities. As you can see below, I am back with Bybit. So for those of you who've been following me for a long time now, I always say that sentence. What is it, like 7 years now? You might remember myself and Rager. We were some of the first CT partners with Bybit. So when Bybit was a newborn, when Bybit was in its infantile stages. Bybit's a phenomenal exchange. I ended up going back with them. It was a personal decision. They have really great liquidity. Second to Binance. That's what I'll say. Second to Binance. There's obviously periods when the market is suffering as a whole in terms of liquidity. But what I do like is they offer, a gamut of products. They offer spot, they offer futures, and they offer options. So I think that's really cool that it's all in one venue. The only other place that offers 2 of those, because they don't offer spot, is Deribit. Options are not really popular, but I think it's really great to have them because options allow you to express your opinion in vastly different ways and levels of sophistication compared to just Delta One products. And when I said Delta One product, I mean futures. So I'm back with Bybit. That link, so tradebybit.com, it's a vanity link. It's attached to a bonus link. So if you deposit $1,000, you will get 10% back. So you get a $100 bonus for a $1,000 deposit, which is pretty reasonable because other exchanges need to deposit like $5,000 just to get that $100 bonus. Remember, it's not something you could just leave the exchange with right away. It is basically for your trading fees, which most of you probably don't realize eat up the majority of your capital to begin with. You know, it's the concept of gross positive, net negative, right? So check out that link. If you're already a Bybit user and you sign up and start a new account with that link, you're entitled to the bonus. If anyone has any trouble, feel free to message me. The bonus structure should be changing over the next week. If you deposit significantly more, you're qualified up to a $35,000 bonus. But I don't think a majority of people in this chat are going to be in that realm. Ideally, right? That'd be great if you guys traded over 150 million contract volume a month and deposited $250,000. Okay, so before I move on from that, just as a heads up, this is nothing about Phemex. I still think Phemex is a phenomenal exchange. I think that it really makes sense to be spread out across this market. I think it makes sense to make sure that you're not concentrated on any one exchange, right? A la FTX. So just because I've gone with Bybit does not mean that Phemex is an inferior product. As a matter of fact, I think it should say more that both names are in the same sentence than anything else, right? Again, the team at Phemex, the execution at Phemex, it is something that I think they've done a really good job with. Bybit just has a little bit more liquidity, and again, they have the options. So, okay, let me go through the chat. How we feeling? We bullish? We bearish? What do we think? I'll go over my thoughts in a second. It's a little bit of a lag, I'm sure. All right, anyway. So picking up off of, so we're going to go over BTC, briefly going to go over the S&P, going to go over ETH, and then I have a couple things on my, as you can see, on deck portion of my watch list. If you saw the most recent link on Twitter, so let me stay on topic. On the on deck, I'll talk about Blur briefly. I'll talk about High, and then I'm going to talk about OP. And that's it. We'll try to keep this pretty short and sweet. We'll take questions at the end. But if you are following along on Twitter, you see that I mentioned that I'm hedging spot BTC and ETH up here. And as close as possible as I can get to 25K. And I said from a contextual risk reward standpoint, it's actually arguably a decent short as well. So we'll go over that. And then I also want to go over something that I posted about intraday trading. And why I think intraday trading is superior to every other approach to the market. And I'm talking about every other approach that is higher time preference and doesn't fall within the category of investing. So we'll cover all those things, and then, like I said, we'll wrap it up. All right, so bearishly bullish. Okay, I like that. Bullish in a day. Scared. Okay. Controlled selling, we need to wash out to go up. I like that. Ryan Giggity Diggity, bullish. Okay, so a few things. There has been a significant sign of strength by BTC compared to legacy indices. So I'm looking at the ES, so that's the E-mini S&P. It's the derivative of the S&P 500. It's the futures contract. And BTC has held up quite significantly, or rather was holding up quite significantly until recently. Anytime you ever see someone posting this, oh wow, look how well BTC is doing, look how well crypto is holding up compared to, you know, the S&P or the NASDAQ. It's always just like I've said before, it's like a generous lag. So it's not that it's strong, it's just lagging still. And if you think about the S&P compared to BTC, well, now a lot of the TradFi desks are out. So a little bit of that correlation trade is gone, even though it's broadly it's still there, but I guess the immediacy of it, where we saw previously. And there's different types of buyers and sellers in both markets. Crypto is dominated by retail. It's dominated by people that are, diehard sort of religious, almost cult-like holders, buyers, right? So, I hate to say that, but it's kind of the truth. Whereas the S&P, legacy indices, stocks, for example, equities more broadly, Forex, bonds, you name it, all the other markets, they have different types of buyers and sellers, right? They have price insensitive buyers and sellers. And price insensitive means that, like, if they have to get out of a position, it doesn't matter if the market's moving down, right? It's just get me out of the position as best as possible. Ideally, most liquid conditions around VWAP, use a TWAP, use a VWAP. But the flows are much stronger in legacy. So there is always like this slight float that takes place before crypto ends up catching up. And I think we're starting to see that catch up take place right now. But the important detail for the S&P, for the last, and this hasn't changed, for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, for the last 9 months, we've only had one significant close outside of this monthly range. So those levels are between, 41.50, we'll say, and, 37.87, right? It's a zone. It's not a line in the sand, especially when conditions are not as liquid. So upper bound, lower bound, price hasn't done anything meaningful outside of that in the last 9 months. If we zoom in on the weekly, range is a bit clearer. Yeah, we have a series of lower highs, right? We had this running diagonal, sort of becomes a line in the sand that a good amount of the market is focused on, for good reason. It indicates that we break it, that at least the pace of movement downward has transitioned from at least down to sideways. But again, you break those running diagonals by the market not doing shit, but just moving sideways, right? So the market doesn't have to go up or down just through the passage of time alone, right? If you're using time-based candles, not if you're using activity-based candles, the market will break that running diagonal. So we broke outside of that. We were back above the 200. Just to recap, the 200, and this is, let me make sure that this is on the daily, the 200 daily moving average for legacy. This is a good line in the sand for systematic trend followers. So your CTA types, again, this is price insensitive flows, right? It's not price insensitive because there is a signal that's determined by price, right? Because it's 200 daily moving average. So that is just a derivative of price. But we had a meaningful close outside of that, a meaningful close outside this diagonal, but we never quite were able to hold the one level that I kept adding to those two pieces of criteria, which was that monthly level. So what I said was I tend to be a little bit more generous with my levels, so I don't have to get sort of enticed by noise. What I said was from 41.50 up to 42. Not only do we want to see price outside of the 200, right, this running diagonal, but the implication would be that if we were above 41.50, 42, we would be outside of those, right? So you have all those three details lined up for what would probably be a significant amount of bullish flows to get behind this. And another thing to focus on is, like, there's a good amount of capital right now that is sidelined, that if the market was going to continue to move up, they would basically be forced into the market. So any kind of fund manager, any kind of PM that is not positioned and the market is performing, at this point it was like 5% up for the year, and they're not in position, they have, the risk is real that they wouldn't be in a job come next year if they missed out on, a significant amount of upside after the market has spent this much time moving down. So that would be bullish. That would have all been really bullish for crypto, because crypto trades like a tech stock. Crypto, BTC specifically, when I say BTC, I'm kind of, it's sort of synecdoche for the whole of crypto. And by synecdoche, I mean, referring to a part to reference the whole. Sort of like if you're talking about, we're going to do a little wordplay. If you're talking about your car, you might say my wheels, right? So a lot of times when I'm talking about BTC, I'm kind of extending that to the rest of crypto too. So we're back inside that monthly range. For all intents and purposes, back inside 9-month value. And I think that this is the level we need to get back outside of, right? Just to begin to be bullish again. So honestly, that might sound silly. We have bounces on the way down, of course. I talked about in the last stream, I talked about the break of this level leading to the test of initially this low. And then we have these major lows after that as well. So you have a good amount of confluence maybe between that running diagonal and this next low around, that is around 39.20. But big picture wise, you would want to see that the S&P is able to reclaim back within this composite, so back within that multi-day range, to really get bullish again, because otherwise it's more than likely that we end up just refilling out this structure the same way we have through all this previous period, right? These previous periods, excuse me. So that being said, there's also a significant shift in the flows, like I said, by those counterparties, by CTAs right now, that are adding quite a significant amount of sell pressure. There's that redundancy. And will sell into a market that's moving down, right? So what that means is once the signal flips, trend followers, right, systematic, there's going to be a good amount of selling pressure to overcome. I don't remember exactly how much, but it is, again, it's in the, it's in 10s, 20s, 30s, 30 billions in terms of capital that's coming into this market if the market continues to move down. And by that, I mean with the trend. So legacy doesn't look good. Legacy doesn't look good. Dollar, again, just to reiterate points that I've covered now for over a month, bouncing at an area where you could reasonably expect it to bounce. Multi-year resistance, arguably now turn support. So as long as we're at this level, it's difficult to get overly bearish on the dollar, right? Give it time to play out. This is a yearly structure, decade-long structure. Not a decade long, excuse me, less than a decade. But, and excuse me, because of that, don't expect it to like nuke in a 5-minute candle, right? Now, obviously something exogenous could happen, shock the market. But the point is give it some time because this is a higher time frame structure. So with all that, BTC doesn't have any tailwinds right now, right? Bitcoin doesn't have any tailwinds and leads me to being less confident in letting spot positions run and more of a level-to-level person, right? So I've been in spot BTC, been in spot ETH for the first time in a long time. I was a little bit heavier spot ETH, but that is while trading futures, right? So while trading futures around that core position. But what I mean by hedging right now is I am taking that spot exposure off the table. And like I said, arguably I would want to get this closer to 25, but I do think something like this has a potential to play out. So we end up breaking down a little bit longer. You get something like we had back here, right? Market continues to find support on the way up. You get a final spike above 25. Does it hit 30? I don't know. At this point, it looks like momentum is beginning to die. If you look at like your higher time frame, 2, 3 day, 1, 2, 3 day structures. If you look at momentum oscillators, it's beginning to show a little bit of a divergence. So it's nothing you can't see with the naked eye. Right? If you're looking at an RSI, it's kind of just showing what the candles are already showing you. So at the look back periods 12 or 14, we're just seeing that big move, big correction followed by a smaller move and sort of an equal size correction that's taking place. So momentum is clearly drying up. Why would I get rid of spot if I think that this is a possibility? Well, I do want to hedge more as close as possible to 25. I do think that this is a possibility, but I do want to remove some of that delta right now. And the reason is, 30K is probably like a shelling point. It's like an agreed upon level that people are going to take profit. And because of that, I think you're going to have a good amount of taking profit before then. Sort of runs into the underside of this prior structure. Going back, that is the underside of this macro structure. So, do we get something that's able to get all the way up there? I don't know. I mean, the point is, I don't know where I can sell up there, but I do know I can start selling here. Right? The only thing you're in control of right now is where price currently is. Now, I posted a checklist, right? So questions you want to ask yourself sort of at the top of the totem pole, even for an intraday trader, is where are we in relation to our higher time frame contextual levels, right? Our key contextual levels, major inflection points. Well, we're right at one right now, right? So I think 25 is that level. And that's for plenty of reasons. And because the level is doing its job, I anticipate that it did its job previously. It's going to do its job now. I'm happy to get back in this if we get something that ends up, let's say we take 25 again, start basing out above here, And now we're spending time up here and establishing value up there. Okay, probably change my mind, right? You're allowed to change your mind, and you should often change your mind if you expect to last in markets. But as far as it is right now, we're rejecting here. Momentum is drying up here. And for the first time, more specifically up here, not only are we seeing, so it's not the first time we're seeing depth start to shift. So there's quite a ceiling. There's a good amount of overhang. If we look at, something like this is just Binance, right? So just look at the liquidity sitting above us. And another thing that you'll also see is, one sec, let me just reset this. I look at depth between 5 and 2.5%. So one sec, launch chart. So market depth. So the ratio of bids and asks, but at that level of depth. And, using this with CVD and open interest, you could begin to get a gauge for, whether or not someone is filling a large position, whether or not, one side is the heavier hand over the other. But right now, if we look at Binance Spot at these lows, we have supportive book, right? But when we were back at these highs, these asks were remaining still, right? Those asks were remaining still, and you had that ratio flipped. Now, not only that, this is not something I lean on, really that heavily at all. One thing I do want to focus on, especially when there's like animal spirits in the market, is at resistance, are we seeing a change in the basis, right? So the premium or discount of futures prices to spot prices. For the first time, and it makes sense, right? Market looks like it's on the verge of a larger breakout. Through this level, it's going to really change also, if we get through 25. For the first time here on the way up, the latter portion of this structure, so the latter portion of this consolidation, started to see the perps trade at a premium compared to spot. So whereas most of this structure, spot's trading at like a $10, $15 premium to perps, so futures, as we got closer up, derivatives are, chomping a little bit more at the bit, getting a little bit more aggressive. We started to see that basis flip. So it was, a sign of overheating in, the derivative product. So at resistance, that momentum's drying up. The level's doing its job for now. Like, why would I overthink it, right? Resistance is resistance. It's been a really long time since we came back here. It did its job back then. It's, however you define it. If we look at this this is BTC we're looking at on the weekly. So weekly highest close. If we look at it on the daily, that daily level is right there. So it's a sticky point, right? It's a sticky point from a contextual risk reward standpoint. It is arguably the best place to short on this chart right now if you're trading this range. Other major levels within this range, obviously at midpoint, right, is a good amount of confluence between the midpoint and this prior pivot, which acted as support. But I think that personally, it makes sense for me to start getting out of spot, hedging this. And honestly, if we do have a move more significant, if we get something like that, then I'd probably be a little bit more aggressive about shorting it for maybe a longer term swing short. And, I think that's reasonable, honestly, because if you look at the risk rewards of this, when I say contextual risk reward, talking about next to the most important contextual level where things really change, and that's right here, right? Because that is the range high going back to July. From a contextual risk reward standpoint, if we look at the first invalidation for this structure, the next likely target, the trade is on the table, 1.5 to 1. There's a reasonable trade right there. There's more target than there is risk at this point, right? We're not as close as we were to 25, right? If you get closer, that's even better. But the risk reward is there to justify a couple different changes to positioning or new positioning. So that's high time frame. It's doing its job right now. It's resistance until it's resistance. And when that changes, like, you just have to be willing to buy higher. And that's always worked for me, right? I mean, I said the 2-day, I said the 3-day, the 1-day. If you look at something like the 2-day, if we look at momentum oscillators, if you look at the 3-day, for example, where's the 3-day? I have to add that again. Oh, it's because I just X'd it out. I thought I favored it by accident. It's a little bit clearer. You have a higher high in price, a lower high in your eye. Again, nothing that's impossible to determine by not looking at price alone. Again, relatively equal highs in RSI. If you look at the daily, it's come off a lot. As this structure drifted upward, you could see momentum died. I don't often have to pull out RSI to actually see that that is the case. And more often than not, people use RSI incorrectly to begin with. They look at oversold and overbought and think that that's like something that you should fade instead of rather looking at the first sign of major momentum taking place in the market. So that's high time frame BTC. I'm going to get down to the local stuff. ETH's relatively the same. I mean, ETH's even weaker, to be honest. I mean, if we look at ETH structure, ETH's monthly structure, the box is a little too light right now. One sec. This has actually been in this monthly range now for the entirety of the structure, so we haven't had any movement outside of it. So monthly being, this is going back to June. So we'll actually use July as a reference because you have your high right there. But you have 1, 2, 3, 4, 5, 6, 7, 8 months inside of that structure. No meaningful change outside of that. Price is moving sideways. Yeah, you did make a new low. Yeah, we made a slightly higher high right here. But again, for all intents and purposes, this is still stuck within a larger range. Now, what matters is this now, transitioning outside of the structure? Are we starting to see a structure that's going to put in, a series of higher highs and higher lows? I think that you could get away with still requiring more of this because if any of that is going to take place, it's arguable that it would still, you could argue rather that it would be above a level that you would really want to see overtaken by price anyway, which would be sort of that, big picture wise. And we're talking as people who, not most, I don't want to say, but I've been in spot. I've been in spot ETH and spot BTC now going back a couple months. I talked about this at the end of November. I talked about December. I kept saying when I was going to be picking up a little spot, nibbling here and there, because I suggested that we would see a change in Q4 and we'd start to see a little bit more action in the beginning of this year. I still have that tweet up if you want to go back and back check it. But it's sort of the end of what would be expected. We're within the range, right? So again, if Bitcoin is going to pull back deeper, ETH underperformed to the upside. We're still looking at sort of the same targets. Now, with BTC and ETH, it's more than likely, I think, that you get overthrow, right? So overthrow in both directions. We didn't quite have overthrow to the upside. But if you think about how there's actually not new retail in right now and it's just redeployment of sideline capital, the market's not that hot to have blow off tops right now. So we could just be seeing rollovers because, lack of momentum is what would show up. So with BTC, for example, midpoint of the range, what did I say is, actually I didn't say the level, it's 20,300. So I think that, even though I put the TP down to this low, I think that it's reasonable that over time BTC comes back and tests this 20K handle. Again, we have a yearly open down here that would be really ugly, but price has never been really, I don't think we've ever left behind a yearly like this. And if we have, it was in conditions with QE. So again, more accommodative conditions. Now, if you lose 20K, so if we lose the 200, if we lose this, midpoint, if we lose, this initial low, we start accepting back into this gap, well, then it's probably lights out back down to that yearly open. So 20K for the bulls is probably the most important high time frame level. So if anyone's still like, I don't want to try to micromanage my spot positions, well, I think you probably should start reconsidering things. If you want to get away with missing out on, another 25% haircut if we do lose 20K. Again, not financial advice, but just my opinion on how fast this market would move if 20K got lost, if 20K was lost. The idea being this is a pretty inefficient move. There's not a whole lot that stands in the way on the way down. The most bullish thing would be us to come down here, wick into this, and then have an immediate response out of here, where you'd catch a lot of sellers off sides and then possibly have a much more violent reversal in the opposite direction. Okay, so we're gonna get down to low time frame. I'll check out the chat in a second. So just to recap, we are at the most significant resistance on the chart, and actually a lot, not for nothing, a lot of alts are. If we just scroll through all of the alts, let me turn off the 200. Scroll through all of the alts, high time frame resistance, high time frame resistance. That drawing stayed perfect, didn't it? Ape, close to the range high. That looks all right. At range high, we're talking about the last couple months range. AVAX is, sort of doing what BTC did, holding a prior swing point before this breakdown and reacceptance back above. So not bad, but range high failure for BCH. What else? Quite an extensive move by CFX. So dusk, you're probably looking at least a retest of 16. DYDX, not what you want to see, even though this is a significant reclaim of market structure. So this is not at range high. This is above. Point is, though, you don't want to see it spend a whole lot of time here, right? Arguably, you would want to see that this was the retest, high time frame retest, and the market was able to hold something like 3. So instead, you have a lower high, right? And you're looking at another test of this low. If this accepts back below somewhere around, was at 245, 250 region, back within the structure, well, then it's probably a little bit of a lights out back down to one of these more significant lows within. So point is, BTC is at high time frame resistance. There's a lot of alts that are. So FTM, sort of similar situation as DYDX, right? Bullish move outside of this long-term range, going back 9 months now. But now coming back for what might be the second retest of this test right here. So not the best situation. As you can see, I have this diagonal drawn. If you do have a structure like this that paints, it's giving us this clean diagonal. A lot of times, the break of this running diagonal is a good momentum trade back up to the high. So that was pretty much the idea with Filecoin, by the way. So I shared this setup yesterday. So looking at, I was ultimately looking at this portion because it was still in progress, but the idea was that this is, sort of this running diagonal that we broke down from. Instead of breaking down and continuing, the market is reaccepting back within that. You've seen this structure multiple times before where it's just slingshotted again back towards the high. So if we go, this is the 4-hour structure, but you'll see this structure. So I'm going to draw it real quick. You'll see that where there's this little like flag multiple times on the way down. Runs back towards that high. Again, right here. Break down, runs back towards that high. So that's obviously, came and went. All right, so I'll look at BTC intraday in a second. I do have these put off to the side, so, and then we'll talk about intraday trading. So Blur didn't work out. I ended up getting out of this for a scalp. I had bids down to 1. But I don't really like the way this looks now. There's a couple things. One, some updates by Blur that are structurally bearish, I think. I think Blur is going to create a lot of bag holders. And it's always going to be that way either way. So as you can see, I wrote red weekly equals reaccumulation period. Now, what does that mean? That doesn't mean that it's the reaccumulation period for this to continue to trend up. It also doesn't mean that this is the red weekly because we have 4 days and 7 hours left in this week. All right. But what I have observed, and you can see this yourself, is that, so one, I said this going back to all of the Solana garbage, going back to the bull market with Serum and Radium, you never have a pair, even in perfect conditions of a bull market, that just continues from wherever it opened, whether it was here or here on a different exchange, and then just continues to trend up and never revisits this point. Unless you're going back to the beginning of Bitcoin, the beginning of ETH, and even them, they had the same shakeout in the beginning. You're never going to have that happen where this thing is just going to have legs upward. So if you're a trader, if you're a holder and an investor, it's one thing, right? If you're a trader, though, and you're holding on to a position here thinking that you bought the bottom, you're just framing that based on this having no history on the chart, right? And it looks like, again, I say that I like to look at new pairs because, one, a lot of them are smaller units, so you have unit bias, it looks cheap. Two, there's no history. So when you look at a chart that's really old and you see that it's been fucking beat down for years, you start to think less of it because, yeah, it might have pump potential, but you've seen it's done it multiple times before. You know how that game works. You're not going to be fooled into holding something that's been down only for over a decade, or 5 years or whatever it is. Something new like this, it looks fresh, right? You know that charts tend to pump, considerably before ever arriving at that end conclusion. So you're a lot more optimistic. The average trader is a lot more optimistic about this. So yeah, it's always good. It's good for an initial pump. Especially this came out at just the right time. Now, it's a bit of a different situation now. Ultimately, these all end up like this. They have a couple days, maybe weeks of pumping significantly, and then they have a multi-month long reaccumulation period. Now, there's a few reasons for this I went over during the last stream. Anyone who is a seed investor is already up 100x in projects. So if you're a trader and you're not a seed investor and you're not up, you look at this entry and think, wow, that's amazing, right? You look at the return back to there as possibly still a good area to buy. It's the beginning of the chart back here. You're thinking, well, the risk reward is really well defined. This is the open, right? I mean, how much lower can it go? Like, who's going to want to sell below there? Well, if you're up 150x already, you could sell into a 75% correction for everyone else and still be up, again, multiples of what your initial investment was. So the idea is you have, it's sort of like I mentioned in equities, you have those price insensitive flows because they're up so much that, what's the big difference, right? So you're thinking from your perspective of, wow, this thing just retraced 90%. Like, for example, off the high right now, this thing is down. It ended up hitting down 35%. But if this thing comes down 50%, 60%, 90%, you might be thinking, well, coins nuke 90% and then they pump. Well, the point is that that's from this chart, right? There's still people that can sell into that have to be cleaned out. So what ultimately has to happen, it's cliche, is you have to have, a reshuffling and a transition and reaccumulation period from the weak hands to the strong hands, right? And it doesn't, why would you want to be strong-handed with this when ultimately you're up incredibly and that end result is more than likely to come anyway. Now, maybe it's done right now. Maybe it pumps. It has one more pump in it before that, but it's an inevitable outcome. It's inevitably going to move sideways and lower for a period of months. So you could hold me to that Blur will trade lower for months at a time. Now, why did I write red weekly for the reaccumulation period? Well, it's usually the case that the first red week after a new listing, so once you solidify that red week, basically that is the beginning of the end, right? So that would ultimately be the highest red week you'll have for the next few months. So what that means is if this red week closes out, it's probably donezo, right? We're probably looking at, much lower prices. So Blur is off the table for me. I mean, listen, there's so many other opportunities. There's times to push it. There's times not to push it. Right now, I don't think it's the time to push it. High, this is something that I'm looking at. Honestly, I think that high, from a structural standpoint, looks decent, right? It looked better the other day. Okay. It looked better when we were back above this low, right? But we had this multi-month breakout. Similar to CFX, I think is ultimately what's going to take place. So CFX, very big pump. Again, we're talking about these like they're in a vacuum, but they're not because we can't discount the fact that this was during a good period. And right now we're in a shittier period, right? Where the market is way more depressed. But the way CFX corrected, where you had a strong initial pump and then you puke back towards that gap, sort of the same kind of setup you see trading BTC and trading everything else, puke back towards the gap, capture a bunch of traders offside, and then rip it back in the opposite direction. So are we seeing something like that possibly develop with high? Maybe. We didn't necessarily take that high like we did with CFX, and a lot of times you'll see that happen. So what you won't normally have happen is double fake outs for failures. So if you take the high and then you take the low and then we're back at one side, it's very rare that you're going to see that this high fails again. And the opposite would be said if, you take the low, take the high, and then are back at the low. So very rare that you would see that would fail again. So we haven't taken the high yet. But I think I still want to focus at this level. So if we end up breaking back down towards that 240, 250 level, we could hold this and we see sellers hit the bid, right? and we could hold that. Market bases out. If you're left with something after that, let's say the market yanks down there, re-accepts above, and then starts finding support back within the structure, and you're back above. I'm trying to like line that up with sort of being back above that level. So it's that level 367. If we do something like that, so mark down, and then we're back above this weekly level, well, then I think that you probably have a much larger leg in. This is new. It's not new, but I think the narrative still might be on the table. And honestly, who shared this? I forgot who shared it. I want to give him a shout out because he, Nacho. He shared CFX before it did like a 5X. So last alt that I have on deck, because listen, guys, there's not a lot right now. I can't, some people might push it and do a stream with 50 alts, but they're just putting out content, but the environment's shit. Is OP. Simple, limited, right? Well, this is OP. Let's just double check. 1 second. What's the history of OP? I mean, it goes back. I think it should go back longer than that, right? Just on another screen right now. So you saw Synapse is finally listed on Binance, but Synapse is the most PvP coin. So of course, no major pump, and there was, but it sold off immediately. Plenty of people knew about that listing though. Okay, so this is the extent of this on exchanges. So OP, higher high on the weekly so far, and holding that prior all-time high. So this is not, I mean, it's kind of like if you just forgot about all that to the left, we're doing sort of the same thing that DYTX is doing, right, or FTM is doing, where we have a very significant contextual level retest, major point in the market. This is DYDX, for example, but the retest is pretty ugly right now. OPs for the most part right now is looking a little bit better. One thing, break of all-time high is usually a pretty good bet, right? Again, says that everyone who ever sold is wrong. The idea of infinite gains, infinite possibilities, because there's no real price history. There's no major bag holders yet because there's no major correction to get past. So that's another thing, right? You have early investors, you have all that, but until you have a major correction, you don't have much upward pressure to overcome unless there's emissions and whatnot. But until this loses this level, I think that there might be another possible momentum breakout play in the making. So for these kind of setups, I honestly just kind of keep it simple. I don't want to get involved too early. I mean, the lower you get involved, the better, because you're closer to your invalidation. But a lot of times you will see that if we're able to break out of something like this, that you do get at least that overthrow to the all-time high again. And then who knows, maybe from this, if the conditions are changed at that point, we have a better situation overall for this to continue to run. What coin did this recently and then didn't? What was it? There was something like that just nuked. It might have been Filecoin actually, because it did have something similar. Either way, yeah. All right, so let's look at BTC real quick, a little bit on the lower time frame. Just some important levels to consider right now. So I've already labeled them. So pre-stream, so again, weekly highs close just under the daily range highs. So this is a major sticky point between 24.3 and 25. Again, this is where things got kind of overheated. So one of the first times market got overheated. Now, I did say that could be the norm if we break above 25 and hold that, right? Because you're just going to see people use futures more. You're going to see market get hotter than it has been prior, because that's a real big change. So you have to start changing and calibrating different baselines for what you think funding should be, or rather where it should be to be a baseline. As far as local structure, right? So let me just put on the profiles. This swing point right here. So that's a 4-hour swing point. Some people use 4-hour closes. That is also weekly and monthly prior VWAP. So for the month of February, last week for this entire composite, that is the VWAP, right? So you can imagine that, as we start approaching VWAPs, you could imagine things would begin to accelerate, because people that have been in positions that are in the money are suddenly going to be closing out as we get closer to their invalidation and to their average entry price. And if there's anyone holding, you still see open interest up, and we've lost that level. It's a good chance that you have some sell pressure that's yet to come into the market because now positions are a little bit more underwater. But that's where your VWAPs are. Zooming in locally, I mean, if we look at this structure over the last week, this is the imbalance move up that we had. We kind of wicked into those singles already, right? So let me put this on 1 hour. We wicked into those singles already. I do think that there's a significant chance that this, the breakdown is not happening like right now, or any kind of larger pullback. It makes sense that this kind of swing point would be an area to capture traders jumping before, right? To force traders to jump. You saw it happen multiple times in this prior structure. It's happened multiple times, period, in any structure. It usually takes a little bit more time, right? If you just look at the average amount of time in this, sort of distribution up here versus the average time we've been up here, I mean, we haven't really been up here that long, right? I mean, if we look at the amount of days that have passed, I do think that it's more than likely that we have, a little bit more chop that takes place within here. Now, we did break down outside of a 4-day composite, but all we did was come back into, I mean, if you look at this multi-day structure, that's really where the composite is. But we had one deviation outside of that where a good amount of volume was trapped. There's your POC. Rip back into the structure, kind of held 25 and 24.2. Acceptance below, so it offered a decent short setup, right, on that retest. But you ended up coming back into this naked POC. So let me just put a line on that so you can see where that level comes from. So that is the volume point of control. That's on Coinbase. And then if you look at Binance, it's right there as well. And I'll just extend that so you see what I'm talking about. Extend POC. So naked point of control. Where is it? There we go. So just an area where, price had established value period, previously. Not an area where you'd expect necessarily price to kind of like rip through. The next thin area, right? So again, this is an area where you could catch a good amount of shorts jumping early. So, and offer something like this. We pull back, retest this a little bit firmer. The next area where it kind of thins out is if you accept below that pocket of volume. So if we accept below something like, if we start seeing that there's no response at, under 23.5, underneath these lows, well then, yeah, you're probably not going to look at much getting in the way until you start coming back down towards this naked point of control around 22.850. So I think like at this point, it's justified if someone is adding a little bit of long exposure here. Maybe you have something that kind of ran like this over time. And that is, this is the low forming. We had a good amount of volume into this low. So relative volume picked up. Open interest it's not like completely reset, but if you look at what took place in this range, right, towards the highs, you'll see very clearly that each one of those highs is kind of the same level of open interest coming into the market. So same level of aggressiveness, jumping over that edge and then unwinding that. So again, at that high, same level of open interest, right? Velocity of open interest really increased. Same thing up here, kind of more of a grind, but really just like ping-ponging in this range of open interest as well. So just think about this as like the amount of money that's coming in and then going back to dry powder and then coming in and going back to dry powder. And it's kind of like this has, I don't want to extend too much from this. It's kind of like there's a little bit of an upward slope. So maybe we have something like this right now where we kind of just reset that positioning. It doesn't look like there's, that many shorts that have come into the market right now. Locally, right? You still might have some shorts that are comfortable in the money that are part of this entire structure that we built on the way up. I don't think it stands out, nothing egregious. So from a contextual risk reward standpoint locally, it doesn't seem like this is a bad area to see longs or to pick up some longs, honestly. The trouble is like your immediate target. So this is where price is right now, is the sticky point of today's distribution. So more like if you get along right around here at this low, I mean 24 area. Let's go back, hold on. I mean, it's kind of thinned out on this, so that's decent. But it's thinned out many times before. We've just moved in the opposite direction. 24, where's my trading view chart? So if you get a bounce, do we just get something like this that ends up putting in a lower high? I don't know. Because this is today's sticky point. So, I mean, longer term, so I think you still got to play it level to level. So if this is a multi-day composite right here, right? So let me show you how I'm grabbing that. So we'll just combine these real quick. So I shouldn't have combined that one, but it's going to keep the same value area either way. So 24.3 up to 24.25 basically. 24.3. So it's the same level that I drew on my own with just the naked eye. So if we look at this as our multi-day composite, right? Kind of the majority of the distribution took place within here, right? You had this deviation down here. Very unlikely that structures just roll like that, period. So big wipe, reacceptance back within, establishing value between these 2 points. If we're able to re-accept above, this would be actually a really bullish setup, right? I've seen these under overs many times before. I talk about this all the time. Setup like this that fails to continue and instead is now trading back above, putting all this positioning underwater, right? If there is fresh position, if that positioning is not stale at that point, if we're back above and back above today's, we'll say today's open. So it's a weekly open actually. One sec. Where did my Spaceman tool go? Spaceman has some of the best tools. Let's see. I don't know what just happened to them. Give me a sec. There we go. So that weekly open, right? It's also right around, so that would reverse this week, which is red right now, obviously. It would reverse the weekly and put us back inside that composite. And then you have something like trapping breakdown sellers at a major low, back above the weekly open, back within this composite. And then, yeah, you're looking for a much larger slingshot at that point. You're looking at, the high of this move again, I think at a minimum, and probably even more. But, we're here. That's where that best case setup, I think, is there. I don't know if I would want to be buying too much. You could start building a position. I'd rather wait for something like this and not get too crazy because we haven't taken this. We haven't even, tapped that low or anything like that. Setup, just to show you guys something. So I mentioned this in a couple streams. Someone said that Tom Dante trades this as well. I thought he was going to put out more content, and then he just fell off the map. So here's today, right? Wednesday. This is Tuesday. And this is Monday. So this is the weekly open right here. Okay. So weekly open a lot of times will get tagged. Will get tagged on Tuesday, right? So you'll see the weekly open tagged. And I told you guys something about, how the market comes into this level. If it comes at it from a distance, you could, if you're looking at a market that's losing momentum, and it's Tuesday and we're, starting to correct, the weekly open a lot of times can just be an area where you can look to target. But here we see just a small bounce there. No major response. So if the market was going to remain bullish in the near term, I think that's one of the qualifying things you would want to see, right? We end up taking that weekly open. So you have some kind of probe under the weekly open, and then the market maintains that level. So, right now we're, again, just kind of being pushed around by the S&P, but that was one of the signs that things were not necessarily looking as good as they were previously. As far as, just positioning goes, funding rates are positive right across the board. No major change, relatively neutral, positive. Open interest come down a bit as funding has come down a bit. So again, I think you're just getting people jumping at both extremes. I think it makes sense that it works in the opposite direction right now too. So my guess is that we bounce right around here, but I don't have necessarily a trade right here. So there's a difference between knowing that we're thinking you might bounce or thinking you might drop, and then also being able to define an attractive trade around that. Into that low so far, you've had a good amount of selling. Again, most of the positioning being flushed out. Put this on. I don't really like to look at high time frame footprints. Not the most bullish response, right? So most bullish response would be leaving something in the dust, like this amount of volume, so like that amount of volume, but then not really coming back within it to play again. So where you have, like, imagine if this is the market ranging, and then one sec, market's ranging in action or in progress, you get the spike, get a big move below, and then you capture a bunch of sellers down here, get a bunch of zero prints on this side, blow the spreads out, and then reverse, and then we never really see down here again. And then instead, maybe your next couple candles open up, more selling coming in on the left side, but the market is now able to hold that positioning behind. And what this is these are sellers at the bid. And for each increase in selling that we see, or maybe even better case, it's more selling than previously, the market is actually able to hold higher now. So it's kind of not the most attractive low. Like it doesn't jump out as this is a bunch of trap sellers into this. It's just positions closing out at a level where you could expect them to close out. Yeah, I don't know why I have this in dark mode and light mode. Today I have this in dark mode, so I like light mode honestly more than dark mode. Until if I'm in my office late at night, then this is a different story. I don't use light mode whenever it's it's late. Okay, let's see. All right, so a couple things I just want to go over. I talk about intraday trading. So I am mostly an intraday trader unless there's a good reason to get into longer term positions. And in the month of January, I was in some of the longest positions I've been in over a year. And that was because it was, there was conditions were permitting. Or, it was more like beginning of December, and there was the spot positions that I held on to. I don't hold on to futures positions that long. Moving into this month, I think my average position length in the last, probably over 2 weeks, 3 weeks, I don't remember if it is an exact month, is around 26 minutes. So big drop off, right? I could trade anywhere from 2 minutes to 2 weeks. In a bear market, it makes sense that I'm going to be, if this is sort of the spectrum, and this is 2 minutes, and this is 2 weeks, this is bull market. This is bear, right? And I'm going to be at any point, if we are in a bear market, obviously not at any point, but if we're in a bear market, if we're in conditions like we are, I'm going to spend more time on this side of things, right? If we're in a bull market, retaking clear areas of market structure, there's more to the bull market than that. When the animal spirits are alive and well. Then I'm going to be holding more positions. I'm still going to be trading around those positions intraday, but I'm going to have a lot more that's kind of, I call line items. And line items mean, if you look at your open positions tab, you get a bunch of positions open. So right now I'm trading smaller time frames. So low time frame trading, high time preference. So people have heard me say high time preference before, and they confuse that with high time frame. High time preference means that you're focused on short time frames. Low time preference means that for your position, you don't really care. You're not really focused on how much time it's going to occur in. It's a longer term position, right? You're not micromanaging the position. So the thing about intraday trading, if you look at something like the ES, if you look at the NQ, your intraday traders are going to have a feel for lower time frame price action. There are a lot of rotations that take place within the day. Intraday trading offers you more reps, right? So there's more activity in an intraday structure or in intraday, more trades to be taken by intraday traders than high time frame traders. This should be kind of intuitive. I don't know why I've kind of got fumbled on that. But if you're trading monthly, if you're trading weekly and daily charts, you're not going to have a lot of opportunities to trade, right? You're not going to be micromanaging position, hopefully. But you're not going to have a lot of opportunities. Hopefully you capitalize on the ones that do show up. This is why, like, when things change on the high time frame, it doesn't make sense to continue to be that much of a contrarian or fade them, because you're bringing in arguably every kind of participant, because in the intraday structure, not everyone can trade, right? Your $50 billion fund isn't trading the SPY intraday. It might be, actually. There's plenty of massive funds that they trade intraday, index futures. But for the most part, like your massive whales in crypto, they're not focusing intraday. I'm talking about massive. You could trade intraday with 8 figures. You could trade intraday with 7 figures easily. But high time frame changes that bring in those massive players, right? When big changes occur, when around major levels, it doesn't make sense to get too contrarian at that point, because you're just fading more people, right? More people can play. But intraday traders are able to trade more, so you get more reps. Now, what do I mean is that if you're a swing trader, Crypto Cred makes fun of himself a lot. I think he just kind of has that self-deprecating sense of humor. I don't think it's necessarily the truth. He talks about missing opportunities or not getting a lot of opportunities because he trades high time frame and he only gets a few signals. You better be certain about your edge in the market, because you're not going to have a very large data set to make that judgment to begin with. Whereas if you are, let's say I have an idea on the market, like hey, I think that every transition from New York session to Asia session, there's an inefficiency to take advantage of. Well, if that's the case, then I could take advantage of that setup at least 5 days a week, right? We're talking about, let's say, transition from New York session PM to Asian session. Right now it's 11:30 at night in Asia. It's 3:30 PM in London. But let's say I just have an idea of some kind of microstructural lower time frame setup. I get a lot more of those, right? Because there's arguably more of those than there are going to be daily setups in the year. So you have a larger sample of trades to judge. You can take more swings, right? And that's if you think you have an edge, you want to have at least, I would say, 30 examples, right? Someone asked me, like, what's the magic number for setups to see whether or not there's a positive expectancy behind the setup, right? Or you have an edge. I'd say 30, right? It gives you a better feel for the flow of the market. And I kind of got into this with talking about rotations in the S&P, but then I a little bit lost my train of thought. Gives you an idea for the flow of the market. So I look at the S&P. When I look at the S&P, I use the tick charts. So I look at 1,000 tick chart, or I look at 350 tick chart for both the S&P and the NASDAQ. I get a really clear idea of the rotations in the market. Someone else might use like 900 ticks. Someone else might use 2,000 ticks, and they might use higher tick or lower tick settings to also mimic the lower or higher time frame charts. So instead of looking at like a 4-hour chart, maybe you look at a 2,000 tick chart, or a 1-hour chart and a 2,000 tick chart. They'll look structurally similar, but one will have a lot less noise because it won't just print based on time. So you get a better feel for the flow of the market. You get an idea for whether or not market is moving quickly from point A to point B, whether it's grinding, whether it's covering short distances on high volume or low volume, whether it's covering large distances on high volume or low volume. So then therefore by that you get an understanding of liquidity. So you just kind of get a better understanding of the cadence of the market. If you're trading intraday and you're trading ES intraday and you're trading NQ intraday, by that, it should also imply that you have sort of expectations, right? So if you're trading the ES, right, and every trade you're expecting 30 points, well, you're fucking moronic, because maybe the overall rotation size for the ES is 4 or 5 points, right? Not 4 or 5 ticks, 4 or 5 points. So if that is the average, just look at the chart right now, for example. And let's just look at these rotations. So rotation being right? So you can see there's this clear rhythm of price. Then it breaks out. That's a change that occurred, right? So maybe get behind this. Maybe this is something beginning. But then it kind of resumes. You still have this overall cadence of the market, right? A little rotation up, rotation up, rotation up. If you just look at the window of these prices, right, from, let's say, this high to this low, what is that, like 5, 6? Okay, so my point is, if you're an intraday trader and you see that the market has this rhythm, well, you could eat all day, right? Now, if you're trading the ES, you could throw size at this. I don't care what anyone says about intraday trading. You could hit the bid with, massive amount of size and make a ton of money and scalp and clean up. You could be multi-millionaire scalper. Anyone who says you can't trade lower time frames and make a lot of money doesn't fucking know what they're talking about. They probably actually have never worked the desk, or they've never really traded. They just kind of repeat what they see on Twitter based on people who actually don't trade anyway. So it's a lot of the blind leading the blind on crypto Twitter, and talking with a sense of authority. But this gives you an idea of your expectations, right? Because unless you're through a major level, unless you're have a major exogenous shock, like why are you holding a rotation expecting 20 points when the average rotation gives 5? So you get an overall idea of the rhythm of the market. You get more of a feel of the market versus being zoomed out. And this kind of should make sense for everything. I mean, imagine if you were looking at so use this as an example. If you look at, if I look at my daughter every day, it's difficult to see her growth, right? Unless I'm looking at her picture by picture each day. If I looked in with a microscope, at some level, at some magnification, I could probably see cells split and grow and then create new cells, and then those cells split and grow. So you're getting an overall idea of the activity that's taking place versus being zoomed out. Where people go wrong is when they're trading intraday and they start zooming out, right? Take an intraday position. Oh, maybe this one's going to be the runner. Or the opposite is true when people are trading longer term and then they zoom in intraday. What I will say, and this kind of ties into what I was, the trading longer, expecting intraday, or focusing intraday and then trading intraday and then focusing longer. I think one thing that you won't hear a lot, but I think this is something that's true, is that it's safer intraday to miss a transition than it is for longer term traders. So let's qualify that. If a swing trader right now, this is a good time, has been swing trading for the last month and a half, the transition for them is going to be more painful if they're wrong than an intraday trader having a transition to a changing regime. So if you're a swing trader, right, and you're adjusting to things tightening up, you might have some trouble adjusting your targets. At some point you're going to have trouble finding trades, right? Again, because there's just going to be less opportunities the more zoomed out you are. Whereas intraday traders, if you are, and this is not like, okay, this is what I'm talking about is if you're someone who has been an intraday trader for a long time, you're still intraday trading in these conditions. For a swing trader, you just have to know when to stop. For an intraday trader, it's still maybe not necessarily much changes for you. In crypto, you're a generalist maybe. So like myself, you have a spot core position, and at certain points, you're going to decide whether or not you're going to take some of those deltas off or, get flat. But you still can intraday trade to your heart's content, regardless of things changing for the overall rhythm of the market or bigger picture, right? Those longer swing opportunities, when they kind of dry up, you're still getting trades intraday. So I think by that also, in that transition, the first time you're wrong, right? The first time you're wrong for an intraday trader and you're thinking things are range bound versus the first time that a swing trader is wrong and they think that, the market is going to continue to have that momentum. I think it's a little bit more shocking to your strategy, your system. I don't know. Maybe that didn't make sense, but to me it does. And then the last thing about being an intraday trader is, and again, don't get me wrong, being a generalist is probably the best thing to do in this market, is that you're less exposed to broad market risk. So you're less exposed to variance and, the shocks of the market by not being exposed for as long as, of a period of time. If you look at just imagine sort of, let's say that this is point A This is the point, or starting point. As time passes, you're exposing yourself to more things, right, in the sort of macro universe, in the market universe, than someone who is trading from minute to minute, right? If I'm holding a position over a period of, let's say, weeks, months, I'm exposing myself to more outcomes, right? This is like, if you look at the options market and see how things are priced, and this is one thing that it takes into consideration. There's a greater range of possibilities that could happen. So by being in a position longer, you're exposed to more potential shocks, right? You're possibly exposed to more, beneficial shocks, but by being in and out of the market quickly, you're not as exposed to those things. So there were many times in the last year, and this is not a brag or humble brag or anything, but where I just didn't get hurt because most of my trading is intraday and I just wasn't exposed. The time that I was exposed was the time that I was looking at the screen, sitting right in front of it, and there's not a whole lot that can catch you off guard versus you're in a swing position. It's been up 25% over the last couple weeks. You sleep on it one night, you wake up, it's down 30. You wake up, it's down 20. And it kind of takes you by surprise. So those are my thoughts on intraday trading. Don't get too pigeonholed into your approach to the market. I see this all the time in crypto. People get really attached to how they define themselves, how they define their trading, and they're really rigid about that too. And then also they apply that to other people as well. I've been trading now for over 15 years. And I will say, like, people joke around about how the narrative trading is the new thing, news trading is the new thing. For anyone who's a veteran who's been trading for a long time, that's just trading. I think what you see on crypto Twitter is like most people are new to markets. So it's kind of like a market university for everybody. At the same time, everyone is learning sort of at the same pace, going through all the different strategies together, going through all the different tools together, learning about the different approaches to markets together, learning about the Fed, learning about, how the macro influences markets, learning about rates. It's kind of like a school for everybody that's new to markets. So they learn something and then they kind of scoff at the last chapter that they pass. Versus at this period in my life, everything's trading. That's all it is. You trade the 2 minute whenever some opportunity pops up. When things change, you might hold positions longer. You don't get like too attached to, I am just far too often I see people say, I am just a swing trader and, I just take this. You have to have a bread and butter setup. But from the people that I've traded with, people I've traded next to, listen, it's dynamic, right? There's a lot of different ways to skin the cat. And ultimately, after you've been doing it for a long time, you just get proficient in hopefully everything. And what that doesn't mean is that here's the difference, is it doesn't mean you are an algo trader and you're also a swing trader and you're also an options trader. It doesn't mean that, right? You have your area, right? But you could attack it from sort of all angles. I'm not saying there's I think you got the point, right? All right. I think that kind of wraps up the things that I wanted to go over. I shared a checklist on Twitter today. That's in the Discord, by the way. Let me just double check. So for those of you that are not in the Discord, one sec. So I'm in my personal Discord right now that, there we go. My personal Discord is just where I keep notes and stuff like that. So this is the Discord. The link is on my Twitter. We have 5,800 members right now, which is pretty awesome. But if you go to Knowledge Base, so I had this filled with everything you would want to know about order flow, price action, TPO. I have the free course that I created in there. That is under the course. So that's at blockroots.com. It's totally free. There's no catch at all. But if you go into Knowledge Base, I posted this morning. This is just a checklist. Now, it's something you could print out and have next to you and you go over it, right? Consistently every day. But I'd never look at this anymore. It's just it becomes like, if I told you how to tie your shoes and I just wrote it out, you probably would have trouble and be like, God, that sounds really difficult. Then I take, the string with one hand and I hold it with this finger, but then I hold my other hand in relation to my other like this, and it seemed difficult. But then this just becomes something that's ingrained in you. But inside this Discord, there's a ton of other things that I posted in here as well. I've tried to post everything that I think could be valuable to every kind of trader. So not just new traders, but extremely advanced traders as well. So that's all it is. It's an archive of what I think is really useful information. I have my templates in here. I go over some stuff that I think is noteworthy. I've talked about icebergs in here as they happened and setups I've taken live. And then I'm putting in so there's no requirement to be here. But I do get a lot of questions about resources. So I have all of the resources that you see me use. Some of these are attached to like ref links. I don't know if any of these are. Some of them are just people that I've been friends with for a long time. Like, I don't talk to the Coinalyze guy anymore, but before he created Coinalyze, the thing that everyone uses now, he was actually the person who made my indicators. At the time, Coinalyze was completely unknown. It's amazing that it's so popular now because he was making my indicators years ago. So that's awesome. And then also exchanges and bonuses. I'm going to keep this updated. Listen, I am partners with Bybit. So Bybit is where I trade. So for example, you could see that this is Bybit right here. I have some money deposited on this exchange. So you could see that this is real. This is my real exchange, right? We could get in and out of position. Yeah, you could, if I click 10, it's going to pull up the exact amount of capital that I have as margin. This is where I trade, right? You guys have known for a long time. I've always said I've traded on Bybit as well as other exchanges. If you want to use that link, feel free to use the link. Where the hell did it go? If you don't want to use the link and get the bonus to Bybit, and you want to use a different exchange, that's completely fine. You have to use the exchanges you're comfortable using. Certain exchanges aren't available to everybody. For those of you that are, in the United States, the deal. It's tough. But this is my Twitter, and my Discord's available to people all across the globe. Phemex link is still there. There'll be other links if there are any discounts or bonuses I could get for you guys. I'm gonna post them in here, and I'm gonna keep them updated so that they're available. And again, there's no pressure to use the Bybit one or any of those. Use what you're comfortable using. I think that kind of covers everything I wanted to go over. I think we're probably done for the day. Completely free Discord. Yeah. So those links are in there, but trust me, you don't have to click on them. You don't have to do anything to get access to Discord. The link should be, and I say that because, the link, hold on one sec. So after this, I'll post it. I'll post the new link. But the Discord actually has a vanity link now. So if we go to, you could search, hold on. Let me see. It should be, it's the stable. So that's the link right down. One sec. You can't see it. The link is, I'll put it in the chat. I'm going to just tag this in the chat real quick. It's right there. And yeah, the Discord is completely free. Who knows? Maybe one day I'll charge for something that's a little bit more high end, but right now it's free. And I say that because a lot of people it's like, my Discord's completely free, but by the way, you only have access to this general room, no information, where everyone just fucking talks shit all day. And you get access to Discord if you use my link for my ref link. There's none of that. It's completely free. All right, guys. I think that'll cover it. I'll let me just look through the questions real quick. I'm not going to chart any alts, honestly. I charted some of the ones that I'm focused on. I don't think that, STX is showing strength, but I think that right now we're probably looking at the market cooling off. I'm having stronger and stronger feelings about that happening. I don't think that alts have a whole lot more to run. If you look at total 3, which is everything minus BTC and ETH, It's kind of the same deal that we have with BTC and ETH. You're just losing momentum right now. So maybe more of a pullback, and then we'll look at alts again more aggressively. The FOMC minutes are coming out at 2 p.m. Eastern Standard Time by accident. I mean, by accident. I don't know why I said that. As a reminder. So as far as Bybit goes, you don't. So the link is already in the chat. As far as Bybit goes, back in the day, if you wanted to have multiple accounts, you had to have multiple accounts, literally. Now every exchange offers sub accounts, so you don't need to have multiple accounts anyway. You could have sub accounts, but it's fine if you, like, let's say you have a Bybit account right now. You could sign up to the new Bybit account using that link and get that bonus. So that's one thing that you are able to do. So you could transfer it's completely fine if you sign up to a new Bybit account and transfer whatever you have on your other Bybit account to the new one, and then you will be able to get bonuses. All right, I think that covers it. I go over ticks there's tick scalp resources in the Discord. To get back into alts, good question. Then I'll wrap it up. So, I think honestly, people don't realize how important BTC is for the rest of the market, right? It is sort of like our Dow Jones. I'd say maybe ETH is like the S&P. If BTC is able to find support, here's the best case scenario, honestly. I'll draw all the scenarios I think, and what I think of them. Something like this is kind of what not all the way up to 31. I think you could expect something like this over time. I think that honestly, the end of this year is probably one of the most certain times for up only. It sounds silly because we're not there, and it's far away, and I'm an intraday trader. But here's my opinion on BTC. I think it just literally is going to follow the halving. I think that's what it's going to do. I think that far out, we've already probably digested a good amount of the fears we're seeing in legacy right now. I mean, all the way at the end of this year, I think there's a significant chance we have definitely seen the bottom, and we're beginning to put in our march upward to where we, possibly have a really strong trend going into Q2 2024. So I think that something like this is kind of reasonable to expect. If you look at ETH's longer term structure, let's just call let me show you something real quick. Just where we are right now compared to this low. I don't think it's going to be that different from the past, honestly. It's 36. I don't think it's honestly going to be that different. I think you need a longer term period of sideways activity. I think we're kind of due for that. So what this writes off, that drawing that I just drew, is the idea of this just moving into an all-time high. So I think no matter what, we're coming back down here to the midpoint of their structure. So it's just a matter of when. Now, if the market is basing out, if we get some kind of, let's say we correct a little bit more, maybe we grind against here for a longer period of time, and then we pop up, and then we're holding 25, then I think that you could be a lot more confident in alts because maybe this has a much larger move to come. So I think you have to play it by ear. I think alts are best when BTC is really stable and not at resistance. So whether that means Bitcoin comes down here, finds support, shows signs of strength, and then we're looking at buying alts with this, or Bitcoin is above 25K, and it's just we flipped that level. I don't know how much more juice we have, though, for alts. It's very PvP right now. So one last thing, and I don't like to do this too much because it has a lot of hopium, but I will do it for this right now. So real quick. So if we go I shared this image. One sec. I got to go into my chat with somebody. I'll pull this up now. Oh, it's ETH. I'll just draw it again. Okay. So from ETH's high, stay with me on this, and then we'll wrap it up. From ETH's high to where it currently is, right? So from here to here, what is that? 67 weeks. Let's go to the 67-week point off of this all-time high. Okay. And now from the first correction to where we currently are, $55 weeks, first correction off of the all-time high, right? So the low of that, where we currently are, 56 weeks. So the point of me pointing this out is I believe that markets have a good amount of symmetry, right? Cycles have a good amount of symmetry. So from all-time high to where we currently are, they have a lot of similarity between these two structures. From the first correction to where we currently are, a lot of similarity, right? Even the length of this correction, so the impulse back. So from the low to the high of that, 4 weeks. That's a little bit different there. It's not definitely not the same there. What was that? Oh, no, because I had that as the original low. I'm like, I thought I had that as a little bit tighter in terms of the similarities. And then throwing on this 200-day and the 20. I think there's an argument to be made for things just kind of happening the way they always have. And if you go back here, if you go back to even 2000 and, if we go back to 2018, 2019, it wasn't like there was this crazy amount of QE, right? If we look at the S&P, I mean, the market has been one way for the last 20 years, but if we look at the S&P and what it was doing back then, we had been following the S&P pretty much. The S&P bounced. We were following the S&P still. It was kind of like it was climbing this wall of worry. There ended up being this major correction that came in 2020, obviously, with COVID, but it kind of followed pretty tightly, right? So does the S&P make new lows? No, I don't think so. So I think we're still going to be range bound in the S&P, but is it that different? How much worse is it going to get? I mean, growth, recession fears, nonstop. Again, I think that it just lines up with, I think the halving still lines up the same way as it did previously. And I think that those sort of structural changes in the market are meaningful in a really small market. So that's kind of my guess. I think it just repeats the same way it has. I think that we're making the macro bottom right now. I think if you're an intraday trader like myself, you really get hyper specific about the levels you want to trade at. But big picture, I think that this is the macro bottom. So, yep, that's it. I'm going to wrap it up. Thanks for tuning in, guys. Yeah, until next time, I'll post a link